Topping financial news the last couple days, Ben Bernanke's update on the economy. Stacey, you have more on that.
Yeah, the Obama administration, Bruce, wants to expand the powers of the Federal Reserve to try to head off any future economic meltdowns. But Bernanke is against some of the changes. In particular, he doesn't think the president should take away the Fed's power to help consumers. Meantime, as we work our way through the summer of '09, the financial crisis has kind of slipped from the top story ranks. Is this simply the eye of the financial hurricane, or is the worst really behind us? Joe Krier, president of Krier Wealth Management, is here to update us on the recent developments. And you want to talk about something you call the greed and fear pendulum. Good morning, Joe.
Good morning, Stacey.
What in the world is that?
Well, it's human nature, you know. Cycles are unpredictable, but human behavior is predictable. And the pendulum says that, you know, fear keeps us hunkered down and in a corner sometimes. But then all of a sudden, the market starts going up and greed entices people back in, and then they go crazy, and that's how bubbles form, is when it swings all the way to the other side. We're not at either end right now. We're closer to fear still, but greed is kind of seeping back in, and I just want to put a cautionary note out there.
Okay, greed. Think about that. All right, let me ask you about the important developments of the week, one of them being CIT, saved in the 11th hour by its bondholders.
Yeah, last week when I was here, we were talking about, you know, the fact that they were about to go down, and there was a lot of CIT employees in Jacksonville, and you know, they were looking for a federal bailout. The Fed said, hey, we don't want to put money in there and save them, and fortunately the bondholders stepped up to the plate. That's not a household name, but it's a pretty big deal, and it could have caused sort of a domino effect had they actually gone down. So crisis averted right there.
Do you feel a little bit better about California reaching a decision on its budget, or does that really not affect us?
I do, because it sort of sets a precedent. They too were wanting to go to the federal government for money, and the feds kind of said no way, and we were kind of sitting back saying, gosh, if they start defaulting, or if California goes bankrupt, they've got a lot of municipal bonds out there, and that's going to hurt the municipal bond market. People will just lose confidence in it. Well, as it turns out, they did find a way to chop $5 billion out of their budget, and they made it work, and that's going to be the pattern, I think, that's going to go throughout the country, including Jacksonville, by the way.
Okay, so some of these things are making some investors feel better. There are some other things as well. Ben Bernanke testifying on the Hill, being kind of reassuring.
Yeah, he's definitely received some coaching as far as how he does his testimony, and he is definitely reassuring out there and on a number of fronts, talking about, you know, that it's getting less bad, slower, whatever that means, you know, and different words like that, a little green speak there, I guess you could say. But he is saying, hey, things are improving slightly, and they're going to be able to pull out of, you know, the economy at the right time. Also, we've got the investment markets going up, and July is earnings season. Today is the biggest day of all, with McDonald's and 3M and a bunch of other companies reporting earnings, and they're coming in, just like Bernanke saying, less bad than they were 3 months ago. And then here we've got what I call the summer doldrums. Things just kind of slow down, you know, and half of Wall Street goes to the Hamptons for the month of July.
And the other half goes to jail, right?
Yeah, kind of like that. So nobody's there to make the market go down anyways.
Just kidding. All right, but we have some lingering problems, folks. Are you surprised by this? One is there's a potential for more bank failures. Let's not forget the FDIC is setting up office here in Jacksonville. They're going to open up in September to deal with the onslaught of banks closing along the eastern seaboard.
Yeah, and you know, this is going to drag on for maybe 3 years. After the savings and loan crisis in the early 80s, actually it was 3 years later, 1,500 banks had failed. So far this year, we've got 57 that have failed, and there's a lot that are right on the edge. Maybe we can avert it, but if they start going down, that's going to hurt consumer confidence. Also, Europe is in bigger trouble than the U.S. ever was, and we haven't seen any major failures over there yet. We think if that happens, it ripples overseas and could send us through another, you know, downturn over here.
And more job losses. Bruce and I were just talking about this. They are predicting that in the state of Florida, unemployment figures could go up to 11%, and that perhaps we will not start climbing out of this recession until the middle of 2011.
It's going to take a while. You know, we were talking about corporate earnings. The reports have been good, not because they're making more money, but because they've been cutting staff so aggressively. And corporations have been very good at that. They're chopping the ranks. That hurts, of course, our employment rate. And if that gets worse, there's no way people can feel better in that area.
Okay, keep in mind a little good news and a little not so good news in Bernanke speak. Thanks, Joe.
It's working itself out, though.
It is working itself out.